Hey guys, Ted the GammaEdge here coming at you with a market recap for April 14th, 2025. Fairly choppy day. SPX did close above Friday's high, however, well off the highs of what we saw intraday today. With that, let's get into pre-market prep and then our intraday tools. So pre-market prep is fairly straightforward today, as always, starting out with the market trend model. Again, this just gives us an understanding of kind of the near-term trend and momentum in the market built off the tick index. If you're not sure what that is, you can Investopedia that. But effectively, it's just our way of gauging real-time and buying and selling in the market. So coming into the day, this was what it looked like after market hours on Friday. Really more or less just kind of in a chop range right here. Bulls did show a little bit of a pulse Friday afternoon, slight bit of filter tick buying, which is just a way we measure significant buying in the market, which right here, this is your filter tick index, plus or minus 1,000 ticks, indicates large buying or selling. So we had a little bit of large buying on Friday. Although keep in mind, just in the context of the massive volatility we still had, and just the large price ranges, weren't trying to get on the bullish bandwagon by any means here. Bulls were still guilty and until proven innocent from our point of view, and especially as we work through the rest of the elements of our pre-market prep, you'll see, through our market turning model that we'll hit on. Hard to be super bullish here. However, we also have to recognize that, this is a signature that we see when the markets do have a turning point. Not all signatures like this lead to a turning point, but all turning points start with this kind of exact signature. So we do have to take it serious from that point of view. And it's the preponderance of evidence. So as we work through the pre-market routine, we'll just kind of see, okay, more things bullish, more things bearish. How does it work? So next we always then go to the options market. So what we do at GammaEdge, we analyze the options market. Why? Because the options are inherently forward-looking, so we can get an understanding of how speculators are positioned out in the future. And then a lot more people are just speculating in the options market as opposed to trading stocks. So it really just makes sense to focus on where people are transacting. And then all of our analysis is focused on the SPX complex. Reason for that is because it's the largest, it's the liquid, it's the most deep options market that we can observe. And so it gives us a good sense of what the general market is positioned for. Having said that, one more nuance for you. The SPX has two complexes, the AM and the PM. The AM is what we're looking at right here. You think of this as your cruise ship. The reason for that is because it's much larger than the PM settle complex, and this is where your longer term, kind of slower moving money transacts. So having said that, put dominated environment still has not changed from what we've seen over the last couple of weeks. We want to see this dashboard, for lack of a better term, not getting into all the details, but we want to see a lot more green come through, which tells us that calls are starting to come back into the complex and or puts are leaving the complex. Either or it tells us, that there is thawing out taking place. We have not seen that yet. Keep in mind, this was pre-market this morning. So, when we come back again tomorrow pre-market, given what price action did today, this could get more constructive. However, we just are not seeing that yet right now. Which doesn't mean that there's not a tactical short-term trade to the upside, but if we want to see a sustained move higher, we need the SPX-A to turn bullish. And that bullish foundation, the signature of that is called dominated above the spot price. We don't have that yet. Again, this is further evidenced by this chart. It's called the true zero charts. True zeros, we do one for delta and for gamma. It's the balance point between calls and puts in the complex as it relates to in terms of delta and in terms of gamma. These have been trending lower. In bullish environments, these are trending higher, which suggests that calls are coming in the complex. But right now, these are still trending lower. So again, from a sentiment point of view, things are not getting better yet. And then moving on to the SPX-P complex. Again, this is your cigarette boat. The reason is because it's a lot smaller than the SPX-A complex, but it's still quite large. And this is where your shorter term speculators are transacting. So we really like to pay attention to this because, GammaEdge, we are kind of shorter term focused just in nature, kind of multi-day to multi-week swing trading than SPX0DT. So SPX-P is kind of our bread and butter. But just given of where we are in the market right now and kind of the carnage we've seen, that's where we've been going through our market turning framework, every day for the past 2 or 3 weeks, trying to pound it in your guys' head because it's very important that we have all those elements lining up to get more constructive on the market. So looking at SPXP, we're still put dominated here in the net delta column. However, looking at the net OI column, which is the distribution of calls and puts without the influence of the Greeks, we can see that calls are starting to come back in the complex, which is more constructive because if we go look at last week or 2 weeks ago, this whole dashboard was completely red, suggestive of, puts dominating the complex up and down the structure. So constructive to see that this is starting to turn. So again, just a reminder, the market trend model starting to turn higher a little bit. SPXP now starting to look a little bit more constructive. SPXA is still not constructive, but 2 out of 3, that is a good start and something that we do need to consider. However, but like SPXA, looking at the true zeros, these are still trending lower as well. But when looking at something called our GEX ratio, so I know we have a couple tools, but it's just a handful that we go through every day, so hopefully it's not too much. But anyways, GEX ratio, think of this as your put call ratio. However, this is a better ratio because it incorporates time. Because what we're doing is we're taking total call gamma on the complex relative to total put gamma on the complex. So it's inherently biased more towards the shorter term structure. So for example, if you have 2 million puts you put on 2 years out, the put call ratio could go crazy. But this GEX ratio, that's not really going to budget much because that's so far out in the future that's not impacting the short term structure that us as kind of shorter term traders care about. So going back to this, what we can see is that this is, trying to turn higher, right? Like it's still in the context of this kind of range where we've had, the really, waterfall and price action. So, we really want to see this ratio get above 1. That indicates there's more calls and puts in the complex, and we want to see this continue to trend higher. Now, keep in mind, right, like this is choppy too, but price action, frankly, was just choppy in this region as well. And then we could see it, kind of lead price lower. But anyways, we want to see it get back up and, continue to expand higher, which again indicates that calls are coming back into the complex. So then we go to the SPX 0DT complex. We are having a pretty decent gap up from where we settled on Friday. Remember, from day to day, the SPX complex in the pre-market is kind of built around where we settled in the prior day. So in terms of, our transition zones, really the distribution of net OI is kind of focused around settlement from the prior day and then kind of proliferates out from there. So again, one thing I wanted to note is, in terms of our transition zones, if you're new to us, you're not sure what a transition zone is. This is just an area in the structure where there is kind of a fight between call and put speculators. It's not quite clear who in that structure is winning. I guess back and forth. For lack of a better term, we generally see choppiness in this region. What we can see here is that zone is like super far from where we were implied to open. So the rubber band is really stretched. I explained that kind of bad enough, but we're going to roll with it anyways. I say all that to say that on a 0DT basis, we were opening up, significantly up in kind of call dominated region. So from this point going forward, what we need to see is a lot more intraday call buying coming into the complex if we want to expect to see price continue to move higher. Because what we saw this morning is there were air pockets looking at this net OI where there was that net OI figure was in the hundreds, and then in the hundreds is generally small. So there's not a ton of influence of the options and the moneyness and the dealer dynamics per se up here. It's really price is free to move about the cabin is what we like to say. So that's where our intraday volume analysis is key to understanding. Okay, if we're gonna move higher, then we need to see that call speculation continue to build throughout the session. So now we've been through pre-market prep. You kind of understand our market turning framework. You understand, market trend model, reviewing the SPXA complex, and getting to the 0DT complex. So now getting in price action itself, right? Like we gapped. I think we opened at the high of the day or pushed a little bit above. Then we had a sell-off. Then we had, the kind of gradual rally throughout the day. But net choppy day. One thing I wanted to point out that we were talking to the Discord this morning is, when we had that price movement lower, that's what this green line is the spot price. The cumulative tick really did not aggressively roll over, and there was no filter tick selling as well. So that was kind of a sign to us that, hey, yes, there is a little bit of selling, but like there's no real sense of urgency with that selling, as opposed to last Thursday, where we saw that filter tick selling, we saw the big waterfall, we saw the reaction in the cumulative tick. We just did not see that here. So these are kind of two very different profiles of market action. And then right into the afternoon, as we kind of bottomed and rallied, we saw the market trend, the cumulative tick trend higher. We saw some filter tick buying coming in later in the session. Then this brings us to our intraday volume analysis that I've kind of foreshadowed a couple times. So for those that have not seen this video before, any post-market review. So what we do is on an intraday basis for SPX 0DT volume, we create something called centroids. And what that means is on a 5-minute over 5-minute basis, we aggregate the volume. We figure out the distribution of that volume, both on the call side and the put side. We find the middle point of that distribution. We plot it because that's what's called the centroids. We do that for both the call and the put side. So we 5 minutes, we find that, we plot it, and then we connect the dots for you and we form right, these solid lines throughout the session. And the idea behind that is at any point in time from the open to say 12 o'clock, we can aggregate these and we can say, okay, based off of the centroids and what has happened, because remember the centroids is the distribution of volume that is kind of market sentiment and kind of a real-time insight into how those speculators are transacting. So we can say all things equal, if this has been the behavior throughout the session, then we can expect this to continue throughout the session. That's where we kind of draw these lines of best fit, right? And so this graphic will change every 5 minutes as we get new data points throughout the session. And the reason that's important is because, using those lines of best fit in the centroids, we can understand what the character of price action is for the day, whether that be trending or chop. And then we can kind of understand with the lines of best fit what the potential path of prices through the close, assuming that the behaviors of the speculators don't change. And if they do change, then we're going to see that manifest in the behavior of the centroids. So it is kind of multi-purpose, and I'll show you how we can use that on an intraday example here in a second. But things I wanted to point out is, in the early part of the session, looking at the call side, this was fairly flat to lower. The call side was not expanding higher. So that was kind of an early tell to us that price, or kind of stepping back to what I was saying about 0DT, we needed to see call volume continue to expand higher, to help propel price higher, because that is a signature that we always see is when price moves higher, we have a trending move of both the call and the put side. You can see here earlier in the section, we did not have that. We just had choppy price action. The put side was moving higher, which was good to see. Like if you're a bull, especially when we had that sell-off intraday, the put side just did not roll over like we saw with all the volatility the last couple of weeks. So yeah, but anyways, you guys don't need me to walk you through this chart. You guys just kind of see how the centroids develop throughout the session. So to show you guys how this is actually useful, here's what volume looked like at 12:30 today. It's your classic kind of choppy signature where the call centroid trending lower, put centroid moving sideways to higher. So this just promotes choppy price action. Then here we are an hour later. This is what it looks like. Again, just more choppy price action. We can see that the call centroid is trending sideways. The put centroid trending sideways as well. So again, this is just promoting choppy price action. And then one thing that we'd like to do is worth doing is we just create a gift at the end of the day of these centroid charts. And it's just fun just to watch kind of what price action did, kind of how those centroids react. You can kind of see when we got the sell-off, then the choppy price action, then that call centroid line of best fit kind of was pulling itself up throughout the session. Put centroid side was pulling itself up. So we weren't really expecting to see a waterfall lower and then kind of just a gradual drift higher, as these two were more or less just moving sideways. So with that, all I got for you guys tonight. Hopefully that kind of intraday volume analysis is clear, pairing that with the market trend model, and then all of our pre-market prep. So going into tomorrow, like the market trend model still looks fairly constructive here. Granted, these impulse move higher that we had in the market are kind of weak. I would rather see, kind of more of a linear up move and more aggressive filtered tick buying throughout a session. Like that's what we see on follow through days is, really aggressive buying throughout the session. So I'm looking for that, because the risk right now is we have something like Wednesday where, we start to get that move higher, but then we roll over. So still very fragile time, in my opinion. We want to see the SPXA, SPXP more calls come into that. But yeah, for now, what we're just saying is tighten up the time frame, still tighten up your size. Still not a time to be a hero. And, if this is the next move higher, there's going to be plenty of time to catch the meat of the move. So with that, appreciate the time tonight. We'll talk to you tomorrow. Thanks. Bye.